Look, managing money is always about one simple thing. It's about choice and liquidity. When you invest money, you can only have two of three things. Only. You can have safety, you can have liquidity, and you can have return. So if I want safety and liquidity, I've got to use something like money market. But with money market, I get no return. If I want liquidity and return, I've got to invest in stocks, but I have no safety. If I want safety and return, I have to give up liquidity because I have to buy bonds or CDs. So every choice that we make within building a portfolio, an investment, is never an all or none investment. It's never an all or none option. I don't have to be all equity. I don't have to be all fixed income. I don't have to be all cash. And more importantly, when managing money longer term, the most important thing I've got to have is the ability to have liquidity and options, because things change. If you look at valuations in the markets today and what we pay for ownership in a company, your longer term outcome is going to be very, very low because you're overpaying for investments. Now, you may think that you've got a particular stock that is undervalued and it's got a great return and it's got great opportunity. It won't matter. When this market begins to decline with any serious degree and margin calls kick in and panic selling begins, things will get eliminated without regard. People will sell everything just to get out of the markets. And no matter how good you think your company is, your stock is, you will lose money and potentially a lot of it. And all you have to do is go back and look at what stocks did in 2008. You can't, everything got killed except bonds. So I've got to have the ability to have liquidity so I can move from one investment to another. I don't want to lock myself up into anything. And I want to have a diversification of my assets so in case I get a bump in the road on one side of the ledger, I've got something on the other side that's protecting my capital or offsetting any of the risk in the portfolio. And this is why we always talk about, managing risk, managing control, having cash. Cash, while it may not earn anything today, is the best hedge because it's liquid, it doesn't lose money, and I have opportunity. I have an opportunity to buy something if something shows up. See, people have been convinced by this last 9 years of just a ripping bull market and lots of liquidity and things always rise that, people like Ron call up and say, markets are fake news. Well, it's only fake news until you wind up in the next major bear market. And then we'll never hear from Ron again. I've been doing this for 30 years. Brent started me in financial radio back during the 2001 meltdown. Been around, and every time it's the same story over and over again. The same calls. And they always wind up the same. This time isn't different. It may seem different, but it always winds up the same. So when investing, always make sure you've got liquidity and safety as well as return. Quick break, we'll be back. Don't go away.